Welcome back. You're watching us here on Chartbusters. Let's get chatting with the management of Jyoti CNC Automation. The company reported a 42% rise in the revenue, net profit more than tripled while compared to the corresponding quarter last year. To discuss the numbers in detail, we do have with us Mr. Parakram Jadeja, who is the CMD of the company. Thanks a lot, Mr. Jadeja, for joining in. The last time you joined us, you did give us a fair amount of outlook for the remainder of this year. Now, the first half, done close to around 800 crores on the top line. What's your outlook when it comes to the revenue as you end this year? And margins, 25 to 27% band, do they sustain there, or could there be an upside or a downside risk?
So we are absolutely able to maintain the margin scenario like that. You will see a little bit improvement to be there. And in terms of a top line, let's say quarter on quarter, we are going to maintain the growth momentum like that. And our capacity is an add-on from this quarter. So we will have some better top line improvement we'll see into quarter 3 and quarter 4 to be there.
So first half, you've done about 40% in terms of top line growth. What happens to the entire year?
We will maintain the similar growth like that, and some improvements we will see into a similar number to be there.
Earlier, Mr. Jadeja, you were talking about 40 to 50% growth. Do you think you can be around 45%, the mid-level, or could it be at the upper end of the range? And as you said, margins as well, you're looking at improving. The third variable that we look at is the order inflow. I think earlier we were talking around 1,500 to 2,000 crores. Is that doable?
So basically, if you look at that in terms of a top line, yes, what you are on a right numbers to be there. And
which is the right number, sir? Which is the right number? 40, 45 or 50? I think you're hinting at 50.
We are near to be 50 there.
50%, okay. Super. That's out of the way. Margins, you said it will be maintained and can improve. So that's as well as out of the way. Order inflow guidance, if you can help us out and break it up sector-wise.
If you look at that, our order book has been improved in this quarter from 3,400 crores to close to 4,300 crores. And many orders in pipeline that. So today is we are not looking to be any let's say challenging on an order book side. The challenge is to now maintain the growth rate in terms of execution there to 40 to 50% quarter on quarter on like. So we are adding the more capacity also over here, and we are keeping the another 10,000 machine capacity will be ready in the next 2 years time, and every quarter will improve like this.
So, just a quick question, a follow-up on the order intake itself, and then we talk about the machine utilization, etc. You had earlier said that for the entire year, your order inflow will be a little over 1,600 crores. And the first half itself, you've done around 1,500 crores in terms of order inflow. So, the next couple of quarters, should we not see many orders coming in? Or,
No, it's not like that.
Okay.
We will see still the order book will be like that. So there is a uptrend we are seeing in terms of all these area. So we were anticipated to be entire year to be 15 to 1,600 crores that we have achieved into this.
Exactly.
Okay. So now pressure on us to deliver more basically. Okay.
Okay. So next 2 quarters.
The way we will, let's say our execution will be improved, order intake will be still better because our pipelines are more stronger over here today.
Okay, all right. Let me just talk about the EMS vertical. That saw solid order inflows, and that contribution as well has gone up as a percentage of the total orders. I think it was close to 500 crores. Could you tell us what is the trajectory out here, further orders in the EMS space, and how does execution pan out from here on?
Yeah. So basically in EMS I earlier also was always telling that EMS is going to be a full color will come in at 25. So this is beginning of this arena, and we are looking furthermore order in pipe on EMS sectors. And in terms of execution, on next year you will see it will reach to be almost 20 to 25% of our total top line to be there.
All right, 20 to 25% of your total top line. And just for reference, what is the margin differential between EMS and the others? Or are all sectors the same margin?
Our margin is basically a combination of all basically.
Yes.
It's a model mix. Today, let's say we have a high-end machines and we have an entry-level product and mix of like that. So margin based on this, our order book today, okay, average machine realizations are reaching to close to 40 to 50 lakhs over there. And that's our margin also to be maintained in between 25 to 27%.
All right, 40 to 50 lakh is the average realization per machine. This was at a much lower throughput. I remember you had said that you want to, increase your throughput as well. Looking at your machines itself, there are three ways you can enhance your business. One, by adding machines, which you're doing in Rajkot. Secondly, by debottlenecking and adding another 1600 machines, which you've done already. And the third was from, 27 lakh, you wanted to increase the realization to 40 to 50 lakh. Now,
so today,
realization...
Yes. We already increased from 27 to 41 lakhs now there. Okay.
So when does it get to 50 lakh?
Based on today's our order book, the order book, average order book today is a 50 lakhs.
So once everything comes on stream, what is the potential revenue and what capacity utilization are you at right now?
So today, in terms of before this, our new bottleneck has been removed. We were at around, let's say, first half is 85% there. And we are looking to be up to this end of this year is to be around 75 to 80% utilization like that. And the next year, our new capacity will come. So we'll see the further growth to be there.
Help us out with your subsidiary, French subsidiary, Huron. Could you tell us what kind of revenues and margin trajectory for FY25? Just this subsidiary.
So subsidiary there also we are looking to be a similar growth and the patterns like that. And in terms of a revenue, let's say last quarter to here also the growth is almost a 50%. Similar momentums we are maintaining. There also we are doing the capacity enhancement to be there. So next year we'll have a much better growth.
Could you give us an absolute number for the French subsidiary?
Yeah, basically we have done this quarter is a 70 crores there.
All right. 70 crores
and margins of?
Margins of let's say in the first H1 our margins has reached to a PAT level is close to 1.8 million euro there.
All right. Just a final question once again, just trying to understand the scale of the business that you can do. At the end of the first half, you had 6,000 machines, right?
Now capacity has reached to 6,000 now.
Okay. Plus
16,400 there. Okay.
Okay. And so
we
all in all,
at the end of the year, we are looking to be in between 4,500 to 5,000 machine execution is going to be happen end of this year.
Okay. And next year you are also adding another 10,000. So you will increase your utilization there as well. Just back of the envelope calculations of the 16,000 machines that you have, even if you utilize say 80% of that by the end of next year at about 40% 40 lakh per machine in terms of
okay. Let's say 10,000 machine capacity will come only end of the year.
Got it. Okay. Very quickly, this 400 crores capex you've announced, what is the asset turn on it?
So the asset turnaround in terms of a fixed asset turnaround, we will reach to 4 times there.
4 times. So another 1,600 crore potential from this 400 crore capex that you've announced.
Correct.
All right, Mr. Jadeja, appreciate you joining in. It seems the street like what you had to tell us. As we speak, the stock that was in the red has moved into the green. Appreciate you speaking to us. We'll hold you at these numbers when you join us the next time around. For the time being, we'll wrap up on this edition of Chartbusters. Stay with us. Trading Hour comes up next.